Hey family, today I'm going to show you a simple way of how to draw out the Elliott wave, broken down by each impulse and corrective wave, because I noticed a lot of videos talks about not trade, the basics. You shouldn't trade, on the corrective wave, only the impulse, but they don't really show you how to draw it out or how to identify it. So I'm just going to break this down as simple as possible, and then I'm going to show you an easy way to do it and show you the pros and cons. So without further ado, let's go ahead and get started. I'm on just any chart right now. I think it's S&P 500 E-mini features on a daily. We're going to use daily just for trading purposes. I mean, I'm going to go into replay mode. So I have an Elliott wave right here. I'm going to go ahead and stop it right here, and I'm going to show you why this leg is an Elliott wave right now. Now, if you're just getting started with learning the Elliott wave, you definitely want to go ahead and Google Elliott wave theory, go to this awesome website, and just learn the rules overall. Okay, the guidelines and the rules are there to help you. They're pretty simple if you take the time to practice them and just read them. I have them memorized now. It took a little minute. So for example, you have your impulse wave, which is wave 1, that breaks out of structure. Okay, so that would break out of consolidation or structure. Well, as you can see right here, there's a break of structure right here. So this is definitely a part of wave 1. Wave 2 cannot retrace more than the start of the move. The start of the move started right here. So I know that this is wave 2. And that is your retracement, your corrective wave. Your continuation, which is your impulse, with wave 3, will typically go up until the 1618 area is what I like to see, but it can go up to the 323.6 area. I keep it simple, and I use the 1618 or the 2618 for wave 3, even though it could go longer. And so this looks, for me, this will be wave 3. And then wave 4, just keep it simple. Wave 4 can't retrace more than 50%. On these rules right here, it'll say give you some other levels where wave 4 can retrace to, like the 14, the 23.6, 382. I just keep in mind that no more than 50%. So I know that's wave 4. And then wave 5 can be the inverse of pretty much wave 5 or wave 4. I also know that it could also be a measure of move of this leg, which is wave 1, and it could also be like the extension or the 618 of wave 1 to 3. So I'm going to show you how I've been taught to do it, and then you can take from it or comment and give me some tips on how you do it. So let's go ahead and let me show you how to measure these out. So wave 1, you get your breakout, right? So let's go ahead and start from the very beginning. All right, we're here. We get our breakout move, and we're trying to determine if this is going to be a valid Elliott wave. We have our impulse wave 1, which is one that some of us will catch, most of the time we won't, but we'll definitely want to catch wave 3. So for wave 4, you gotta wait, and you do have to wait till you get your first pullback, which is right here, that bullish engulfing, right? And then that's when you take out your Fibonacci, and you're gonna measure from swing high to swing low. And then you're gonna see, okay, well, how far can wave 2 pull back to? And we know that it can go anywhere except for here, right? So you want to, since we don't know, you do want to line it up with structure. So you always want to look left. And so as you can see, this is the left shoulder, this is the left shoulder. The head and shoulder pattern, you can use that. You can use previous support and resistance to be like, okay, wave 2 could stop right here. So I'm going to go ahead and mark this zone up where it could possibly go to this previous level where we have structure, okay? And so we'll go ahead and replay it, and as you can see, it pulled back to the 618 of this move. Perfect. Now we want to get in for wave 3. Now we want to know, well, how far, since we have a new swing point, we need to figure out, well, how far this can go, and where is wave 3. So you're still going to use your swing high to swing low point of this move, and you're going to reverse it if you're using the regular Fibs. And I'm going to show you right now. You just click reverse, and then we know, I told you I like to use the 1618 area, period. So I'm going to go ahead and mark up this zone. I create zones because the market is never precise. And I'm always look left to see if this zone aligns with structure, if there was a reaction anywhere, which it was right here. Okay, so wave 3 can go here, and I'm going to also show you how to use the extension. So for those who like to use your fib extension, you want to draw the fib extension in the direction of where the market is going to go. So you start from the swing high to the swing low of the start of that move and bring it back up. Okay, and then you want to go ahead and align it, see if it aligns with your bias. Okay, well, the 1618 is up here in this area. We do have the 200, which is also in the rules. So let me show you that. Wave 3 could be at the 200. So that's also strengthening your bias. Okay, this could go down here at the 200 as well. And it could also go a little bit past that. So we're going to stick with that zone because I have two confirmations that wave 3 can end there. And then I'm going to look left. Oh, I've already looked left because it was a good area of support. So let's move this market forward and see if it goes down here. And this is how you plan your trade out with using Elliott Wave. Let me speed this up just a little bit. Perfect. The market got to that zone, UTP, and now you should be looking to see if it will continue down or give you a pullback to begin wave 4. And so remember, wave 4 can be a retracement, a corrective wave up to 50%. So you want to take out your fibs and let's move it forward. As you can see, once you get that swing point, so learning your swing highs and swing lows is important. You'll have your swing point, 2 candles on the left, 2 candles on the right to validate, okay, this is a true pullback. And then you'll take your fibs out from swing high to swing low. And as you can see, this market pulled back. Sorry about that. This is a little messy. Swing high to swing low. It pulled back to the 618, a little higher than we want it to go. Should not. Wait, is this reversed? Hold on. Let me make sure it isn't reversed. It is reversed. Okay, so it pulled back to 382 before we first got our bearish candle. Now we should be asking ourselves, where can this market go to? We got my pullback, and I have my first bearish candle where it can indicate also that this move is over. So I got my 2 candles right there. That also confirmed it as well. Of course, on the lower time frame, you're going to have way more candles than would have been in this trade. But I'm going to show you how to plot wave 5. Now, with wave 5, you're going to do the extension of wave 4. And from the swing high of that candle to the low, back to the high, okay? You're going to look for the 1618 area as well as a possibility of that market dropping here. It could also go to the 1236 area, which is up here. So I'm just going to go ahead and make this whole zone big like this. Look left, see if it aligns with anything to the left. Even though it's a huge zone, we can always adjust it. You can see that you did get a reaction in this area. If you trade supply and demand, this will be a good area where the market had pushed down using this. So let me make this a little bit smaller. Okay, so what I'm doing is I'm boxing up this last buying candle before the market broke structure here as a area where the market could go to. All right. Now you can also use measured moves where, okay, impulse leg 1, let me go ahead and draw this out for you. And we're looking for wave 5, which can start, you can stop right there. 1 to 4, the impulse leg of 1 measured move, which is a mirror move, says that wave 5 could go this far down. Now, to confirm whether this is a valid area, you want to have commonality, and this is what I'm establishing right now. With commonality, you want to use multiple points to see if they all add up in the same zone. So I'm going to use the extension of wave 2 to see if the 1618 area aligns with any of these. Okay, so I do have the 2618 aligning with this red line as well. So I'm going to mark this zone, and then the 1618 is up here as well. I'm going to mark this zone right here. Okay, and mark it a different color. And so then right now I'm establishing commonality. This zone is pretty valid. Market reacted off of here. This zone is valid as well, because we had previously marked it from this demand zone. And this one at the bottom is very questionable. And so I've used the extension of wave 2. Now I can go ahead and use the extension of wave 3 and see if that will work out. So we're doing from 1 to 3, the extension levels, and finding commonality. And as you can see, this doesn't match with anything that we've already really drawn up regarding the 1618 level. So that would not be a good one. I believe I did the extension of this impulse leg already, but I'm going to do it again just to be safe. And the 200 is the one it matched with, and then the 1618 area looks like that's kind of close to this zone right here. So this middle zone and the one at the bottom are like my top 2 areas of where the market could potentially go to. We're going to go ahead and so what I did was I broke down each wave to find commonality to see if I had zones that matched up on top of each other. And those are the purpose of doing that is to predict where wave 5 could go to. So I'm going to go ahead and bring it to possibly here, even though I think we have this zone and this zone. This one had more of a realistic, and we're just going to see what it does. Wave 5 can be a little difficult to spot as well, but with practice becomes perfection. Now, as you can see, this market violated wave 4, which means you have truncation, which is a possibility that one or two things happens. This is not your real wave 4, and that this was your wave 4. You have to adjust your Elliott wave. Oops, pull that back. And what I mean by that is wave 4 is here, and then this could be your wave 3, and then your wave 5 will adjust like this. Anytime wave 4, as part of the rules, exceed into wave 1, okay, then you have a failed Elliott wave. So let's just see. It's just tapped it. Okay, so that was that. So for this particular one, I'm not saying it's a failed Elliott wave, because this one did hit the original bias did hit this zone, this middle zone right here, before it turned around. So you do have a completed 5 wave, and then you go into your ABC correction. So we'll talk about that on another video. I just wanted to show you how to kind of plot the Elliott wave. Now I'm going to show you the indicator to use to confirm whether or not you drew it right. Okay, and I'm going to go ahead and get rid of these boxes so you can clearly see what the work looks like. So this is how you practice identifying and drawing your Elliott wave. You try it on a naked chart, and then you draw it out, and then put the indicator on and confirm. And as you can see, we got it. We pretty much got it almost to the T, where you have your impulse 1, 2, 3, 4, 5 before it turned around and continued in the opposite direction. So I hope you guys were able to learn something on from this video, specifically on how to map out the legs, because that's what's really important. Please like, comment, subscribe. If you have any questions, feel free to ask me. Love you guys, and stay tuned to the next one. Take care.